Good evening. Actually, it's just slightly after the market close when we're recording this update, so let's say good late afternoon. This is Brian Paragamian, senior trader as well as co-founder of ProfessionalStockTraderLive.com, bringing to you Thursday evening's update for January 29th. And it doesn't surprise us that today the stock market reversed all of its gains from yesterday and actually gave back 26 points more. And we're not going to talk about this a lot, but we're just going to look at the Dow chart here. And we talked about a Dow move coming up into this 8450 to 8500 area. We didn't quite get there, but we did make mention on our live webcast yesterday after the Fed announcement that oftentimes the following day the stock market reverses itself. Now, we don't know if that was the exact reason, and probably not, but that sometimes does happen. But what we do know happened today was durable orders came in worse than expected at a negative 2.6% versus a negative 2.2% that they were expecting. New house sales came in less than expected at 331,000 homes versus 397,000. We continue seeing bad economic reports, and we're going to probably continue to see that, which in turn we think in time takes us back down, visiting these levels on the Dow Jones average, down in the 7,400 area. Now, what we're going to do tonight is we're not going to really outline any stocks that we have for day trades or anything like that, although we did today, late in the day, enter into SYK, an option position going out to March on the March 35 calls for SYK, which is Striker, which we happened to yesterday actually get out of on a swing trade for a $2.80 gain. We're now getting back in as the stock moves back into a zone that we feel warrants a buy. We're going to play it via the options. Again, the March 35 calls for around $7.40 we paid. So we're sitting in that position playing for the longer term move into March on the stock. Again, we also have that on our investment idea list as well for stocks we feel have great value going forward. But we've got two more stocks that we're going to add to our investment ideas list. And let's start off with one being ticker symbol KCI, Kinetic Concepts. Let's not even talk about what they do at all. Let's just simply look at their earnings here for 2007 of $3.11. 2008, they earned $3.80. 2009 estimates are for $3.42, less than what they earned in 2008. But the company is now guiding. That's an estimate. The company is now guiding to $3.95 to $4.10. You got to be kidding me. Here's a stock back in 2008. As we look here, actually this is 2007 right here, that traded up to $66 a share. That was with $3.11 in earnings. Now I understand we've got a different market environment here, but geez, $4.10 on the high end, $3.95 on the low end, and look at the other thing. The stock is about to break a one-year downtrend. So we give this stock some serious consideration back into our buy zone, which is lower than it currently trades, $1, $1.50 lower than where it's trading right now. We'd give this stock some serious consideration to put in your portfolio. The stock's trading at 6 times 2009 estimates or 2009 earnings that the company is guiding. We like this stock. We think it's way too cheap at this price level. We like the pattern on it. We like the fact that it's ready to break the downtrend. We're a buyer of this stock on a back off. The other stock we're going to look at is called Sepulcor, and the ticker symbol being SEPR. Here's another one that we feel it has another great pattern, and here we're going back 3 years on the chart. And again, here's one you can see that was trading at 63 again back in 2007. And if you look at the earnings here in 2007, they earned $1.74. 2008, they earned $1.61. 2009, the company is guiding to $2.10 to $2.70. Based on that, it's trading at an 8 PE. Now, today they reported earnings. They reported 92 cents versus 56 cents for this quarter, and they blew the street out by 36 cents. So, thus the reason why the stock was up as much as it was up today, and it closed up $2.24 at $15.87. Here's one, though, again, that we'd be looking to be an owner of on a back off. Please refer to our investment ideas page on our website for specific price, entry prices. But here's one that we think warrants to be in the investment idea list that should be bought. The company's guiding significantly higher. They've got a 60-cent range on earnings because of some of their drugs. They're not sure how much they're going to sell of some of their drugs, but they're obviously thinking they're going to sell a lot of them, and they might sell even a lot more than what they're anticipating based on that high spread we've got between 210 and 270 in earnings. So here's one that we like a real lot, and let's just take a look here at the chart on this one here as well. We've got two separate downtrend lines that we've drawn. One that's going at over the ultimate highs here, going back into December in April, and the other one we are drawing a little bit more less steep. In any event, it's breaking almost both downtrends. It broke the one downtrend here, the other one is ready to break out. We like the pattern. Either way, the stock is way undervalued. It also has what you call a inverted head and shoulders formation. You've got the head down here in the low 983 area where it put its low in. You've got a left shoulder over here. You've got a right shoulder over here. You broke out above the neckline here. The stock moved on up, almost touched the 200-day moving average. This is a stock to be a buyer on all backoffs. This is a stock we're going to look to buy on a fill of the gap and maybe even before. But here's a stock you got to look at being a buyer of. That's the bottom line there. The last stock we're going to look at is Wynn Resorts, WYNN. And let's type this in up here now. The stock closed down $2.92 today at $32.82. And here's a stock that we think warrants a serious look as we zoom in on the picture here of being a potential short. And let me just go ahead and tell you why. They've got earnings coming out February 12th. And if we take a look here and we draw a trend line here, we can see how 32.5 has held the stock for how many months now? The better half of October, November, December, and January. 3.5 months, the stock has not broken, violated 32.5 with the exception of a few spike lows, and we're Xing out the spikes there. We think below 32.5, this stock has some more downside, and it wouldn't surprise us if this stock, in fact, broke into the mid-20s prior to its earnings in February, that being February 12th. The stock is poised to break down. We think it's going to break down below 32.5. We'd look to be getting short, running a stop above these highs here, and the highs up in here would be precisely 33.97. So you're looking at $1.50 risk on the upside. Down below, you're looking at probably going out, testing the lows of 28, and probably taking them out as we head into the earnings, especially if we have a bearish market between now and then and we start breaking below the 8,000, 7,900 level. This stock could have some serious downside in it. So that's the only one we're going to present to you from the short side. Since we are in a short term here, bearish mode, tomorrow could be a totally different day. But here's a stock we think you need to look at to play from the short side when it does break 32.5, using a stop up above at 34. Again, it's just an idea. That's all we have to bring to you tonight. We're going to stay so long for the evening. Have a good night. Join us in the morning. Again, always take a look at our PSTL news area to see when exactly we're going to air. Every day could be slightly different times depending upon scheduling. But have a good evening. Join us in the morning, and we'll see you around 8:20. Good night.